Mike Santoli, it's been a while since we heard from you, so I got to go to you on this, particularly when it comes to the dividend here. Yes, the numbers overall are good, but, we've got Meta well above 400 a share. I know it peaked above there a few days ago, but it had been in the dumps for a long time because of how much they were spending in part on the metaverse and the fact that there were all these questions about whether the business model was broken. What does this mean for this kind of tech company that traditionally has shied away from a dividend, though we know Apple did it years and years ago, to express this kind of confidence in cash flow and this sort of, maturity?
Yes, I would say all of that applies, John. Pretty assertive statement that, look, there's enough to go around. As of September 30th, earnings for this quarter were supposed to be 483. They came in at 533. That was only 4 months ago. You got to keep in mind the momentum in the underlying business. They are making gestures of capital discipline, of shareholder friendliness. They seem to have obviously taken to heart the criticism that they were being profligate and spending big. Very much, I think, setting themselves apart from Alphabet, which has not paid a dividend after a longer history as a public company, and they're kind of happily having these loss leader businesses on the side. So obviously, Google's an amazing business. Meta's trying to maybe, be a little bit distinct from that. There was a time when Microsoft initiated its dividend. There was a time when people say, "Oh, that's it. The growth years are over. We can't. This is now a cash cow business." Clearly, that's been proven in hindsight to be false, as Apple has proven that false. So it's interesting. It's about a $2 annual rate of dividends, so about 0.5% on the stock price right now, but it's a start.
Yeah, I mean, there's a lot, Dan Ives, to like about this report. A lot of beats across the board, with the exception perhaps of Reality Labs' losses being a little bit bigger than expected. But, I mean, headcount, we were talking about the cost controls at Meta, and it really sent the stock higher last year. There was an expectation that maybe perhaps their spending was going to increase in 2024 as they continue to invest in AI. The fact that they're holding that estimate, $94 to $99 billion, steady with previous estimates, and that their headcount's down 22% year over year, tells us what?
It's a turnaround for the ages. I mean, the comeback kid Zuckerberg, go back a year and a half ago, and now you're doing a dividend. Subscriber growth, digital advertising. I think you're seeing a narrative here. We saw it from Alphabet, saw it at Amazon here. Digital advertising, unless you have a telescope, hard to find the recession. And I think this is going to be super bullish across the board. This is a stock that could have a 5 in front of it.
Paul, what does this tell us about popular narratives? Dan just referenced it. A year and a half ago, so many people were saying, oh, their business model is broken. TikTok is going to eat their lunch, blah, blah, blah. We've seen Apple go through these cycles where people were saying that kind of thing. Hey, maybe we're in another one now. What do you look at as an investor in these kinds of companies to determine whether the story really does still have legs?
Well, I mean, it's just amazing what all these different metrics they've reported, but Meta's a company that's taken AI and used it to its advantage big time on both the, serving its users. Last quarter, they mentioned that users were spending 7% more time on Instagram and 6% more on Facebook. And then they're also using it for their advertisers to get more effective ads served to those people who are spending more time on their apps. So, I mean, they've taken AI and they've really used it to their advantage, and it just shows some of these, you have all these companies benefiting from spending or from selling products and selling the chips, but Meta's really taken AI and taken it to another level.
Morgan, got to mention the stock, Meta, now up more than 11% in overtime, but of course things move around a lot and the call's still to come.
Call's still to come, but to your point, this is a big move for this name in the after hours right now. Victoria, I want to go back to ad impressions for Meta, and specifically the fact that the company says that across the family of apps, that increased 21% year over year. The average price per ad increased 2% year over year. We've already been having this conversation, I think, back to Google, to Alphabet earlier in the week about the recovery we're seeing in online advertising. How does this set us up in terms of some of the other names potentially that are yet to come?
I think that the advertisers are really looking for most bang for their buck. And as we had mentioned, Meta's doing the best job. I think above far, if a company wants to implement AI, how Meta is doing it is actually providing value to the customers. Now, remember, as a user, you're not the customer. The customer is the advertisers. 98% of their revenue is ads. And so the fact that they're able to have targeted ads, better uptick, so they have premier pricing. They saw a lot in the Chinese e-commerce last quarter. So they're seeing around the world, people value Meta's platforms. And remember, It's all encompassing. It's Instagram, it's WhatsApp, it's Messenger, it's Facebook, and it has Facebook with Reels. And the addition to ads to both Reels and Messenger has been key. But the fact that it's also targeted and you're seeing more daily users, that's huge. Everybody wanted to say it's the death of Facebook. Everybody likes to talk about how they don't use Facebook products, but obviously everybody is using Facebook products still. So I think, the death of Facebook was definitely exaggerated in 22, and I'm happy to see the revenue come in there. And it's a little bit of a warning to others that advertisers will freely move their dollars to get more bang for their buck. And what Google lost, Meta picked up. And I think the one question I still have is what's happening with the metaverse and Reality Labs. Are we really going to lean into this metaverse? I think we're seeing potentially what happens with Apple and VR. Meta's put a lot of bets into what's the next generation of social media going to be. And that could be huge over the next decade if they get it right.